Sukuk versus bonds. Ever heard of Sukuk and thought, wait, is that just an Islamic version of a bond? Well, yes and no. Both Sukuk and bonds help governments and companies raise money. But how do they work? That's where things get interesting. Let's break it down. A bond is basically an IOU. The issuer, for instance, a government, borrows money from investors. In return, they pay fixed interest over time. At the end of the bond's term, you get your money back. Simple, right? But here's the thing, interest riba is not permissible in Islamic finance. Why? Because it's seen as unjust enrichment, earning money from money without taking on any real risk or effort. The system's all about fairness, shared risk, and value creation. So how do you raise funds without it? Thus there's Sukuk, a Sharia-compliant alternative to bonds. Instead of lending money, Sukuk investors own part of an asset or project. They earn profit, not interest, through things like rent, revenue, or shared business income. In other words, bonds equals lending plus interest, Sukuk equals ownership plus profit sharing. Now here's where the two really part ways. With bonds, investors are creditors. You give money, you expect interest, no matter how well or badly the project performs. If the company profits, great. If it flops, you still get paid. Well, unless they default. But with Sukuk, it's a shared ride. Investors and issuers both carry the weight. If the asset generates profits, you earn. If not, returns might be lower or more stable. It really depends on the Sukuk structure. Some Sukuk are designed for risk sharing, while others offer fixed returns tied to the buying and selling of real assets. That flexibility is part of what makes Islamic finance so unique. For example, asset-backed Sukuk give investors actual ownership in the underlying asset. This means if something goes wrong, investors have a legal claim over the asset itself. In contrast, asset-based Sukuk only use the asset as a reference point. Investors don't own the asset directly. Their return comes from the creditworthiness of the issuer rather than the asset's performance. Another key difference, the ethical filter. Sukuk can't fund industries like gambling, alcohol, or anything harmful. So you're not just investing for gains, you're investing with an actual purpose. Now let's talk real-world numbers. According to Fitch Ratings, global outstanding Sukuk are expected to surpass $1 trillion in 2025, solidifying their role in the debt capital markets of OIC countries and emerging markets. That's massive, but still just a drop in the $30 trillion global bond ocean. The upside? Plenty of room to grow. Sukuk have already helped fund many infrastructure projects such as airports in Malaysia, roads in Indonesia, and even green energy developments in the UAE, and that's just the beginning. Even countries like the UK and Luxembourg have issued Sukuk, proving it's not just for Muslim-majority nations. And with the rise of ESG investing, like green energy and ethical portfolios, ESG Sukuk are on the rise too. According to Fitch Ratings, the market for sustainable Sharia-compliant finance continues to expand rapidly. In the first quarter of 2025, ESG Sukuk's share in emerging markets increased to over 50%. Sukuk offer an ethical, faith-based path to investing without compromising on growth. They're grounded in real economic activity, like building infrastructure and funding sustainable development. That makes them naturally appealing to ESG-conscious investors who value transparency, asset backing, and positive social impact. Conventional bonds may still rule the global markets. However, they're often tied to interest-based lending and financial instruments that don't always reflect real-world impact. On the other hand, Sukuk are anchored in tangible assets and ethical principles, offering a more grounded approach for investors who care about where their money goes. If you're looking for ethical alternatives or values-driven investments, Sukuk offer a compelling path. One that aligns wealth building with integrity. They're not just for faith-based investors, but also to socially responsible investors who value transparency, real assets, and positive impact. It doesn't matter whether you're Muslim or simply prefer to steer clear of industries that clash with your values, Sukuk can be a thoughtful alternative. So are Sukuk and bonds the same? Not quite. They may serve a similar purpose, but in principles, structures, and values, they are worlds apart. Get bullish about learning.